Hey guys, welcome to another episode with me, Shashank Udupa, and today we're going to talk about another trending sector that is going on in the market, and a lot of people are talking about this sector, and that is the ethanol blending department, right, or the ethanol sector. So a lot of ethanol stocks are rallying in the last few days, and we want to know why this is happening. So today we're going to do a nice simple video for you, okay, where we understand why ethanol blending in India is so important, especially in the fuel. What is the history of ethanol blending in India? What are the environmental gains for this program in India, for the ethanol blending in India? Now we're also going to look at what is happening in India. Who are the beneficiaries? What is the current price? What is the production capacity? What is the future production? We're also going to look at what government is doing to help people, right? Incentivize the manufacturers to build more ethanol. We're also going to see whether there's enough demand for the future, right? Is there demand projections for the future? And finally, we're going to look at top 8 stocks that are there in the ethanol blending program in India. So we're going to do some analysis on that. Awesome. I hope you guys are excited. Today is again another value-packed episode. So stay tuned. In the next segment, I'm going to talk about the first segment, which is why ethanol blending in fuel is so important to India. Now, the main purpose for the promotion of industrial ethanol is for its use in blending for petrol and to promote the usage of biofuels, right? It is mostly used in blending. Now, currently 98% of the demand from the road transport sector is met by fossil fuels and only 2% is met by biofuels. Now, as per PPAC, India imports 85% of its oil demand. Now, obviously that's bad because we're importing it from other nations, so we will incur a loss. This is a big strain on not only the country's entire economy, but also on its foreign reserves, because now we are open to foreign exchange risk. Now, it also makes the Indian economy very vulnerable to oil price risk. So tomorrow, suddenly if oil price goes up, now we have to start importing at a very high cost. And this is 85% of the oil demand we import, which is not good, right? We should have more in-house. Now, domestic biofuels basically provide a strategic opportunity to our country. Now, they reduce the nation's dependence on the import of fossil fuels. Okay, so we don't have to import so much if our domestic production goes up. And also they are very environmentally friendly as well, right? Because they have lower carbon emissions than pure fossil fuels. So biofuels are very important from that perspective. Now, the common solution that helps is to reduce the dependence on oil imports and promotes the local companies and the farming sector. Now, ethanol blending is not new. It's not something new, right? And has already been implemented in major countries like US, EU, China, Brazil and Thailand. So this is why ethanol blending is so important to India, mainly because we will reduce that 85% of the import that we do from oils. Will reduce the dependence of import of oils so that our foreign currency, our reserves are much better. Let's look at another thing. The environmental gains from the use of ethanol, because we said in the past, right, we looked at it that if it is pure fuel, right, the carbon emissions that come out are slightly higher. But if it's if ethanol is blended into the fossil fuel, then the emissions are slightly lower. So let's look at how that works. Now, there are big environmental gains to be had from switching to ethanol blended into petrol. Carbon monoxide emissions are seen to have dropped by 20% when using only E10, and around 30 to 50% lower carbon monoxide when you use E20. So obviously E20 is very good. Now look at another chart, right? Now here it says the carbon monoxide, okay, which is the baseline. In two-wheelers, it's 20% lower for E10 and 50% lower for E20. And for four-wheelers, it is 20% lower for E10 and 30% lower for E20. So this is why if you go to E20, if you reach E20 by 2025, that should be slightly better. Now next, let's look at what is happening in India. What is the current production capacity in India? What are the future projections with respect to ethanol? Now, the current production capacity in India is around 684 crores, with around 426 derived from molasses-based distilleries and 258 from grain-based distilleries. Now, the capacity is expected to enhance to 760, slightly more from molasses, and 740 from grain, to the total of 1,500 crores. So it's by 2025. That means people are predicting that in the next 4 years, the entire capacity of 684 crore liters will become 1,500 crore liters by 2025. Now, what is the government doing for this? How is the government incentivizing manufacture? So let's look at how government's price incentive to manufacture works. Now, the government has provided attractive pricing mechanisms for the procurement of ethanol from different sources, which has helped the quantity supplied to the industry rise by almost 10 times since 2014. It's gone up by 10 times. Right now, if you look at this, another chart, I will show you this. Look at the ethanol supply per year in quantity supplied in crores per liter, and look at the blending percentage in PSU OMCs, right? See how it has grown from 38 in 2014 to 332, 10 times almost in 2020, 2021, and also the blending percentage has gone up quite significantly. So that is why it is very important. Now, considering the expected vehicle population growth and the projected demand for ethanol based on over and above petrol, the volume of ethanol required is expected to rise a lot in the coming future, and this is going to be obviously very beneficial for the ethanol industry. Now, let's look at some ethanol demand projections. Now, even considering the loss in demand from EV uptake. Now, I know you guys have this question that, electric vehicle segment is coming up as well. If that comes, you don't need biofuels at all. You don't need ethanol at all. So obviously there'll be a slight loss, which is, yes, it is a possibility. The projected numbers show that the demand for ethanol will still double to 721 crores when the time we reach E20. Now, why is this the case? Now, let me show you a graph of how the ethanol fuel demand looks like in 2025, assuming the electric vehicle segment coming up as well. Now, if you look at a conservative segment versus if you look at E10 in a conservative space and E20 in a conservative space, you will see that the production demand in crore liters is around 921 crore liters in 2025. Now, if you take a low carbon, good EV, assume the electric vehicle segment picks up very fast in India and it becomes really great. It's still at 721 crore liters, worst case scenario, right? Which is still considered good for the entire ethanol space. Why? Because it is growing at such a significant fast pace. Now we come to who will benefit from this, right? There are obviously a lot of players that will definitely benefit from this. The major beneficiaries in this segment will be sugar and ethanol makers, as they are the ones supplying this ethanol to the industry. So the sugar manufacturers and the ethanol makers will actually benefit a lot from this. The retail fuel sellers are unlikely to make much profit from this because blended fuel will obviously subsidize them, so they will not make a lot of it, right? Now, similarly, if you look at automakers, okay, automakers are the car makers who will be making the new E20 vehicles are also unlikely to make much. Why? Because they can't increase the price of their entire car so much, because then it will become a pricing war. But all that is fine. What we'll do in the next segment is we will look at the top 8 guys or top 8 stocks in the ethanol blending program that will benefit a lot from this program. Okay, so we'll look at the top 8 stocks in the next segment. Now let's look at the top 8 beneficiaries of ethanol blending program. Now the first stock that we will look at is Sri Renuka Sugars. Now Renuka is one of the largest sugar manufacturers in India with their brand Madhur, which is around 32% market share is what they own in the sugar industry. It is based out of Maharashtra, and Renuka has an existing ethanol blending capacity of 720 KLPD per, which is kiloliters per day, KLPD, right? Which is around 6% of the total ethanol capacity in India, which is quite significant. Now, Renuka recently approved another 250 kiloliters per day capacity addition in Feb, and is planning to add another 430 liter per day capacity, and it will bring the total capacity to 1400 KLPD by October 2022. It is derived 10% of sales and 20% EBIT from ethanol only in FY21. So this is very important. Renuka also owns a company called KBK Chem Engineering, 100% subsidiary, which facilitates turnkey distillery, ethanol and biofuel plant solutions. Now, if you look at how the stats look for Sri Renuka Sugars, they currently had a market cap of around 8,700 crores with a 1-year return of around 309%. Right? Now, the next company that we will look at is known as Balrampur Chini Mills. You might have heard of this, right? Balrampur Chini Mills is again one of the largest sugar-based manufacturers. Now, they're also based in Uttar Pradesh. They have derived around 15% of their sales and 50% of their EBIT from ethanol in 2021. It has a current ethanol blending capacity of 4.5% of the industry capacity at 520 KLPD, which is kiloliters per day. It is also planning to increase the capacity to 840 KLPD by December 2022. Now let's look at their stats as well. They're also very similar to Triveni. They're currently trading at a market cap of 7,000 crores, P ratio of 15. The ROE is 19.1, which is quite interesting. Operating profit margin 14.8, low debt to equity ratio of 0.43, and their 1-year return is 165%. Now, if you look at the third company that we will look at is EID Parry. Now, this was founded in 1788. It is one of the oldest sugar companies in India with over 225 years of operation. It is a part of the Murugappa group and has operations in Tamil Nadu, Karnataka and Andhra Pradesh. It also owns Coromandel International, which is one of the leading fertilizer companies in India. It is derived approximately 15% of their sales from ethanol and 15% EBIT from ethanol in 2021. Now, Parry has an ethanol capacity of 234 KLPD, which is currently 2% of the entire industry capacity. But this also, even they're planning to increase their capacity to another 150 KLPD with new distilleries coming up. Now, if you look at their market cap, again, 7,300 crores in line with the other market cap. Return on equity slightly lower at 11.8%. Debt to equity ratio very low at 0.22. And the 1-year return is 60%. Now, the fourth company that we will look at is something known as Triveni Engineering. Now, Triveni is a conglomerate across different segments, which is agriculture, sugar, alcohol, and power cogeneration, and engineering, which is water and wastewater management, right? And even power transmission they do, defense they do, a lot of things they do. And they're also based out of UP, which is Uttar Pradesh. Now, it is derived around 11% of their sales and 19% of their EBIT is from ethanol itself, okay? It currently has a ethanol capacity of 320 kiloliters per day, which is approximately 2.76 of the industry capacity, and is planning to increase totally another 200 they're planning to do by 2022 next year. So even they'll have a lot of increase in ethanol capacity. Now, if you look at their market cap, slightly lower than the other two, which is at 4,600 crores. Their return on equity is slightly higher than the rest, which is 20%. Their debt to equity ratio again very low at 0.56, and the 1-year return is 243%. Now, the fifth company we'll look at, which I think a lot of people know, is Dalmia Bharat Sugar. Now, Dalmia Bharat is a part of the Dalmia Bharat group. It is also based out of UP, and it is a preferred sugar supplier to institutional giants such as Coca-Cola, Pepsi, Mondelez, Britannia, and many alcohol majors like United Breweries. Now, it has derived 16% of its sales and 42% of its EBIT from ethanol. Its current ethanol capacity is at 240 KLPD, which is around 2% of the entire industry capacity. But now it's planning to double this it's planning to double 240 to 480 by approximately Jan 2022. Now, if you look at their market cap, it's at 3,500 crores. Their return on equity is slightly lower at 14%. Debt to equity ratio low at 0.43. And their 1-year return is almost 300%. The sixth company we look at is Praj Industries. Now, Praj is again a global supplier of sustainable solutions for bioenergy, high purified water, critical process equipment, breweries, and industrial wastewater management. Now, it has over 750 customers over 75 different countries. Now, their bioenergy operations are involved in setting up plants to make ethanol and other products like bio-CNG, right, etc. for fuel use. Now, the company has an order book of 1,748 crores with 85% domestic orders, and 64% of those orders involve bioenergy. Now, they have derived 68% of their sales in FY21 only from bioenergy segment. And if you look at their market cap, it is at around 6,500 crores. Their return on equity is slightly lower at 10%. Their 1-year return is at 435%. Now, company number 7 that we will look at is ISGEC Heavy Engineering. Again, it's an engineering company which works around heavy plant engineering, including sugar plants and ethanol distilleries. Around 13% of their sales are derived from sugar, and around 13% of their order book, around 6,700 crores, is from the sugar industry. So this is again, if this ethanol program goes up, these guys will benefit a lot because 88% of the orders that they were getting are from domestic players itself. Their market cap again at 6,200 crores, return on equity at 12%. Their 1-year return is at 214%. Now, finally, another player that will actually benefit a lot from this ethanol blending program is a company called Global Spirits. Now, Global Spirits is the largest manufacturer of bulk alcohol, okay, and extra neutral alcohol, or also known as ENA. It sells Indian-made Indian liquor, right? IMIL, which is known as Indian-made Indian liquor, and they also sell Indian-made foreign liquor. Okay, so it's Indian-made foreign liquor, IMFL, and they also do bulk alcohol for hand sanitizer, franchise bottling, etc. Now, their current capacity for ethanol is 500 kiloliters per day, which is 4% of the entire industry capacity, quite high. Around 55% of their current capacity is used for bulk alcohol. Now they're planning to expand their current KLPD from 500 to another 420 more. Now if you look at their market cap of global spirits, they're currently at 2000 crore market cap. Their ROE is at 27.3, which is very high. 1 year return of 450% and operating margin of 20.7%. So guys, this brings us to the end of the video. Now I hope you first understood what we were trying to do in this video. We were talking about the ethanol sector. First we are trying to understand the problem, right? Why was this push there? Why do we need ethanol blending in India with respect to fossil fuel so that we don't rely too much on oil prices? Then we realized, okay, then who are the players in India? What do they need? What is the current capacity? How is the government helping them out? They're actually doing so much effort into building this ethanol program so that everything in the future will be either E10 compliant or E20 compliant. So this is why ethanol has a good demand driver for the next 4 to 5 years. It can be seen as a upcoming sector in the market where a lot of push is being given by the government as well. So again, I hope you like this video. We put a lot of effort into finding and researching all these stocks and the entire industry. So if you did like this video, please like, share and subscribe. I would love if you do that, and also put your comments below because I see the comments. So if you have any other video that you want us to do, or if you have any comments on the current video, please drop it below. And again, the main goal of doing these videos is for you guys to get educated, for you to become an informed investor or an educated investor so that you don't make illogical decisions. So hope after this video, after you watch this video, your knowledge went up by at least 5%. If that's the case, then I'm very happy and my job is done, right? Awesome guys. So this is me, Shashank Gudappa, signing off. I'll see you soon. Hey guys, disclaimer. Any stocks that are mentioned in this video is only for educational purposes. There is no recommendation or on buy or sell from any one of us, right? This is only for educational purposes.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.